This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Welcome back to your TF Metals Report podcast highlights for the last week of November 2022, a week that we knew was going to be consequential and very important, as there was all sorts of economic data along the way, a speech by Chief Goon Powell, and then, of course, Friday was set to bring the latest U.S. jobs report. On Monday, we watched the dollar index pull back and finally hit its 200-day moving average, from which it bounced. That's exactly what we've been expecting for the last couple of weeks. But we didn't know where it would head from there. In our podcast on Monday, we discussed this being the most important chart of the week, and that was all part of what we discussed Monday, November 28th. Again, this was the key to the day. Here's your dollar index. Red line is the 200-day moving average. It was 2 weeks ago. I think that's 2 weeks ago today, after plunging for 5 or 6 days, that we got within about 30 cents of the 200-day and then bounced, then rallied all the way to 108. But today, plunging down and briefly trading below the 200-day, and then when it bounced from there, that's when everything changed. So now we'll have to see what happens next. You could say maybe there's a double bottom here. And if now the dollar rallies after the BLSBS and rallies into the FOMC in 2 weeks, maybe now we'll get above 108 and go to 109 and fail and then turn back down again. Maybe not. Maybe instead the BLSBS will be terrible and the dollar will plunge again later this week. And by later this week, that 200-day moving average will be 105.5 or higher. Maybe we'll just get one bounce here and then fall below it. This is going to be the chart of the week. Actually, chart of the next couple of weeks probably we're going to have to follow. Tuesday the 29th saw the December COMEX contracts go off the board and into delivery, and it also brought a very nice bounce in COMEX digital silver. And it allowed us to draw and present a very interesting chart for COMEX silver. A lot of folks will spot on this chart an almost perfect cup and handle bottom formation, projecting significantly higher prices to come. All part of what we discussed on Tuesday. You can see it in silver too. Again, this absolutely perfect cup and handle. I drew the red line, the long one, the July to November red line at 21. I put a blue line under it, and the midpoint of that line, the midpoint of that cup, is exactly the 1st of September on that low. So it is a perfectly symmetrical cup. You get the breakout above the 200-day failure to hold it. Now you got this little downtrend. Resolve this handle positively. And again, there's going to be bankers out there that don't want that to happen, but resolve this thing positively. Get back above the 200-day and move through December back north toward 23, and even last year's close with a shot at turning it green too. Wednesday, of course, brought the last day of the month, and it was time to check the monthly charts. But one of the other charts we took a look at in our daily podcast was the GDX, the big mining share ETF. We've been watching this for several weeks, actually a couple months, for a major low. And about 3-4 weeks ago, we caught that major low. There was a pennant forming on the chart. There was a false breakdown and bear trap with an island reversal and then a move higher. This is about as classic of a low on a chart you're ever going to find. In the 4 weeks since, the GDX has rallied 30%, with much more to come. And that was all part of what we discussed Wednesday, November 30th. GDX comes just crashing down over 6 months, almost falls 50%. But then, you recall, late in October and early November, we were watching this little wedge down here, this little pennant. Would it be predictive of turning the corner? Well, you got that fake out, breaking down on the second and then gapping down on the third before gapping back higher and into the pennant on the fourth. False breakdown, island reversal, and that, my friend, was the low right there. It was not as low as we were back in late September, but that right there was your sign that the bottom was in. And we've gone, up, like I said, 30% since, flagging. kind of channeling higher now, making, again, a high, a pullback, a high, a lower high, and a new higher high today. No doubt has a date now with its 200-day moving average. Once above there, I don't see any reason why it can't go to 33, which is another 15% from here, even by the end of the year. On Thursday, December 1st, it was time to check that dollar index chart again. Since we last discussed it on Monday, it had tried to hold the 200-day as support. But on Thursday, it fell. It broke down below the 200-day, and it closed below the 200-day for the first time since June the 16th, 2021. Just more confirmation that that trend has changed, and a downtrend now in the dollar is going to provide a tailwind for the precious metals this month and into 2023. All right, so then to the dollar. This goes all the way back. This is 18 months of the cash dollar index. And again, looking all the way back here on June the 16th, I think is what that is, if I remember right. 2021 until today, December 1st, 2022, almost 18 months. The dollar was above its 200-day moving average, but it wasn't going to go on this way forever. And so now the trend is broken. The trend has changed. And that is a wind at our sails. It's not straight up, obviously. Just like the dollar's not going to go straight down. It may go back up tomorrow. But the trend has obviously changed. Friday, December the 2nd, brought the latest U.S. jobs report. Do not believe what the media is spoon-feeding you. It was a horrible report. First, it's all just statistical guesswork. But even the alleged jobs that were added were all in the part-time category. That means you're losing good jobs, salaried jobs, and trying to replace them with part-time jobs. You lose your salary job, you replace it with 3 part-time jobs, and the BLS considers that a net gain of 2 jobs. That's how they can crank out numbers like they did here on Friday. The market is seeing through this. The dollar tried to rally, was rejected at its 200-day moving average. We said that was going to be the chart to watch all week, and it is going to close below that 200-day moving average. In fact, that's the second day in a row it will be below its 200-day moving average. Those are the first closes below that key technical indicator since June of 2021. Now, back to that COMEX silver chart. What a beauty we have here. This is about as beautiful of a technical cup and handle formation as you're ever going to see. Perfectly symmetrical. That low on September 1st coming right in the perfect middle of the teacup. You got that handle breakout, a pullback to support, and now surging higher away from its 200-day moving average, and also at its highs of the week as I record this, and north of 23. Silver looking really good. We've been talking about silver leading the way out, just as it led gold and the miners down, and it appears to be doing just that. It's going to be a very interesting 2023. I strongly urge you to join or rejoin TF Metals Report to get ahead of it so that you are prepared. You're going to see some stuff that if I were to tell you now what's going to happen, I'm not sure you'd believe me. So join us at TF Metals Report. Look forward to a very good 2023. And we'll talk to you again next week.